Good Tuesday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by, checking out the Market Chameleon pre-market show with this man, Dimitri Pargamonic. How you doing, D?
Good morning, Will. How are you?
Great. You want to start with the disclaimer?
Yep. Good morning, everyone. Before we get started, keep in mind, Will and I, Market Chameleon, we are not a registered investment advisor. We're not a broker-dealer. We're not telling you what to do. We're just sharing ideas. If you need professional advice, call your registered investment advisor. Call your broker. That's what they're there for, to give you advice, provide you with guidance. There's the disclaimer.
Perfect.
And with that, let me share my screen. If you guys have any questions, join us for the first time, you could put those questions on the live chat on YouTube. Will's watching it. He'll read it back to me. If you want to come on a show and ask your question live and direct, we also provide a link to Zoom. If you click on that link, it takes you over to Zoom. Once you get into Zoom, there's also a button there, raise your hand, at the bottom of the screen. Click on that. When you'll get prompted, I think, to turn on your video camera. You don't have to turn on your video camera. However, once we let you in, everybody could hear you live. You can ask your question directly. Those are two ways to ask questions. While we're waiting for questions to come in, what we'll do is go over the pre-market report. I'm going to show you guys an update I did to the option order sentiment. So I wanted to try to cover that today. Also, I got a couple emails with questions. If we don't get any questions coming in, what I'll do is default to some of the emails and we'll go over the questions we've been getting over the emails. Sound good, Will?
Perfect.
Let's start out pre-market report. These are stocks trading at pre-market hours. We have the most active stocks, biggest percentage gainers, biggest percentage decliners. Coming down here, I see 48 stocks made our percentage gainers list, 48 stocks on our percentage decliners list. From this perspective, looks like pretty much even at the open. Let's take this list and filter it down to S&P 500 companies. What we want to do is remove small cap stocks, ETFs, leverage products, closed-end funds, preferreds, all those. We'll take them out, see what's going on in the S&P 500 stocks. And to do that, we're going to use this filter here in ETF. These filters above control the data in the tables below. I'm going to drop it down in ETF. By clicking on it, we get a list of different ETFs. The top one, SPY, is the S&P 500 ETF. When you select that, like this, the list below will get filtered by stocks that are holdings in the SPY, which are the S&P 500 constituents. Here we see 0 stocks so far made our percentage gainers list, 6 on the decliners. So from this perspective, we're looking like a more bearish bias so far at the open. And I think one of the news events right now people are talking about is Japan right now indicating that they might start on a path of raising interest rates and battling with their inflation, which their inflation is not as high as the rest of the world, but they're not used to even a 2 or 3% inflation rate. And they probably have the most, loose and monetary policy right now as far as what interest rates go. I think in the world, they're the ones that have the lowest, and they look like now they're setting themselves up on a path of raising interest rates. And this inflation, we could see it's a global problem, right? It's not just happening domestically. It's really getting exported throughout the world. Everybody's feeling it, and the central banks around the world are starting to battle it. And part of that is when we raise interest rates and the dollar goes up, it's good for us in terms of kind of containing the inflation somewhat, because if the dollar goes up, that means our purchasing power increases, puts a little bit of a lid on inflation. But when other central banks then start to raise their interest rates, it's kind of an offsetting benefit. Something to keep an eye on, because they were kind of the last standing nation not moving their interest rates higher, and now they're indicating that they're going to start doing the same thing as all the other central banks in the world. If you don't have any questions, Will.
We did have a question from a new user who just hopped on, Robert.
Yep.
Robert's asking, hello, can you show how to use Market Chameleon to trade long strangles prior to earnings to take advantage of a rise in IV right before earnings release? I don't know when earnings season starts, but that's the question.
It sounded to me like trading long strangles prior to earnings, something like that.
He didn't say long. I think he just said straddles and strangles prior to earnings.
Prior to earnings. All right, let me think how to set that up. You know, if you had a specific.
Actually, he did. Or he did say long straddles. You're right.
I think he did say long straddles. Okay.
Yeah, correct.
Let me think about how to show it as far as.
Well, why don't we'll save that question? It's a very intense question. Why don't we save that till tomorrow?
Yeah, that's almost like a webinar. Yeah, that's almost like a webinar, not something quick I could show. But I'll go over that question. You know, I have to sit there, find an example of a stock that's coming up with earnings, so we could take a look at it. Unless you have a specific stock you're looking at now.
Well, we'll do that tomorrow.
Okay.
Perfect.
I'm going to save that question. Yeah, save that question for tomorrow. But it's a good question. Thanks for the question. We'll save that one for tomorrow.
And just so we know, the start of earnings season is typically led by the banks, and it looks like JP Morgan is around January 12th.
Right. So I'm just going to take a look.
January 13th.
All right. So we have what's that? Four of them coming up today after the market close. Tomorrow here. So I'll take a look at it, see how things set up. So this way, you know, while I'm reviewing the data, you guys aren't sitting there and waiting. Unless you do have a specific stock you're looking at in a specific situation, I'll take a look at it. Otherwise, we'll take a look at that question tomorrow.
Perfect.
Okay. Couple things I did want to go over real quick is I'm going to show you an update we did, and then maybe what I'll do is also mention. I had to mention this actually in a good question. So I had two emails come over kind of one day apart from each other, and most of our questions come in through emails, right? Not everybody can watch the show live, or people just feel more comfortable sending their questions through the emails. And I was going to mention these two emails. It's very interesting, and I'll tell you my take on it. So one of the emails comes in from a person describes himself as, it starts out like this: I'm a multimillionaire. I worked on Wall Street, the top Wall Street banks around the world, handled all these customer accounts, blah, 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 blah. And I'm going to tell you how that one went. And the next day, I get another email. And remember, Will, I told you we have, so my daughter came home and said, you know what, Dad, I have friends who use Market Chameleon. And she said, I stand in there and I see them on their phones and they have Market Chameleon, and she sees them reading emails. And she came home and told me that. And I was like, that's interesting, but maybe my daughter, you know, she's in 10th grade. Maybe she's just trying to be nice, make me feel good. And I brought that up. So anyway, I got an email from one of her friends who uses Market Chameleon asking a question. And I'm going to tell you these two emails and how they contrast, and how the one from the 16-year-old is so much more impressive, you know, than this other one that claimed, you know, all these, you know, bragging. And and I'll explain why, and like you guys tell me what your feedback is. But before we do that, I do want to cover this piece right here. Okay, well,
Yep.
so this is our order flow sentiment report, and here what it is we aggregate it. And if you guys used it before, you see here, this is SPY, IWM, QQQ at the top, and this shows the total net deltas that we're calculating from the options trades. So we take the options trades, we try to interpret based on the surrounding information, was the incoming order from the end user, a buy or sell, a call, a put, or a strategy like a vertical spread. And based on the interpretation, then we take the delta of that trade and say, okay, well, if this person bought, let's say, a call and the delta was X, that means he got long this much delta, right? So the incoming orders are getting long delta, meaning that that's the direction they're betting. And then we add up the deltas in aggregate over the day. So I'll show you here. I'm going to click on SPY. So yesterday in SPY, there's a net imbalance of getting long 6.4 million deltas. So you could see we had incoming orders getting long 99.7 million deltas, getting short 93.4 million. So this is the net delta long, which the assumption is that if if that's the side that people are coming in and the broker dealers are doing the other side, they have to hedge that delta by buying the stock. Okay. So that's your net delta volume, 6.4. And I know, people were looking at this and asking me questions about this delta. And I said, look, the SPY is an ETF, right? And in the SPY, the ETFs a lot of times are used as hedging mechanisms. In other words, that's where you would go to hedge against your market risk or your overall risk. And we added this yesterday. Okay, so these here below to show kind of what's happening in the stocks that are holdings in SPY. Okay, so these are stocks. So people can be buying options or calls or some puts in the SPY. But the other picture is, well, what are they doing in the components? What are they doing in Tesla and Amazon and Apple and so forth? Are they also getting long there or short there? And on aggregate, how does that look? Okay, so remember we talked yesterday about trading is really spreading your risk and offsetting risk and hedging risk. And so to do that, here's the new data and information. And at first, what we did was we took the SPY delta and we said, well, how are we going to compare it to the delta of other stocks? Because there are stocks that are higher priced, there are stocks that are lower priced. So getting long 1,000 deltas in, $100 stock or $1,000 stock is not the same thing as getting long 1,000 deltas in a $5 stock or $10 stock. So what we did initially was we took the deltas in SPY and we converted it to dollar delta volume. So we multiplied it by the stock price at the time of the trades times the volume times the delta. All right. So the dollar delta volume in SPY yesterday was 2.4 billion. Then we looked at all the S&P 500 stocks, okay, the components, Tesla, Amazon, all the stocks that make up the S&P 500. We said, well, let's do the same thing in those and aggregate them to compare to what's going on in SPY. Okay, so that added up to negative $6.4 billion of deltas short. Okay, so what's happening here is when we're looking at it, people are getting short the components using options. Okay, by our interpretation, on the option side, the components themselves, they're getting selling deltas. All right, in the index SPY, there's net long deltas, but when we add them up, aggregate them, on balance, there's $4 billion worth of dollar delta volume on the short side. Does everybody understand that? Trying to explain it quickly.
Hey, D, can you just go through, there's a lot of chatter on the in the Chameleon YouTube chat about this feature. Can you just show how you click to it?
Yeah. So when you go under options, right? Under options, when you come here, order flow sentiment, hit overview. Okay, and you get this report here. The top one, it shows SPY, IWM, QQQ. And then here in the bottom, it gives you more components that you could tap through. So the top 10 S&P 500 companies over here, it shows us the top 10 bullish order flow, top 10 bearish, right? So you could see here, Ford made the top of the list on the bullish, Tesla made the top of the list on the bearish. And here, when we talk about deltas, right, you could get longer short 1,000 deltas in Tesla or long 1,000 short in Ford, but also 1,000 deltas short in one stock is not the same thing as 1,000 in another, because the stock prices are different. So the percentage move would be different as well for dollar move, right? Because what is a delta? It's a dollar move in the stock price, but the stock prices are different. So that's what we did to say, well, how do we compare them? How do we compare the deltas in all the components to the deltas in SPY? So we converted it to a dollar delta volume. Okay, how much is it in dollars terms or notional terms? Okay, does that answer the questions though?
Yeah, that's helpful.
And here we listed the top 10 S&P 500, which would be SPY, top 10 in Russell, which would be the IWM, top 10 in NASDAQ, which is the QQQ, NASDAQ 100, right, QQQ. And you could see here, it's a different picture, right? You get a different picture once you take those two and put them together. It kind of reverses what the net order flow is in the market. Okay, so even though it looks like, oh, people are getting along the SPY, S&P 500, which is true, right? That's true according to our interpretation. On the other side, when we look at the components, a different story is developing there. And a lot of the trades are also, traders are hedging and offsetting risk that they're seeing in other places. Okay, so it gives you kind of a more complete picture. Any questions there? I know there's a delay, so I'll wait a little bit, but hopefully that makes it a little bit clearer, what's going on in the market, or a better viewpoint of what's going on in the market.
40 asked something earlier that I missed, and this you may be able to answer. So the dollar delta is positive. The market maker has to sell that equivalent delta right to hedge it, he's asking.
Well, no, then the market maker would need to buy it to hedge it, right? Because the market maker would be on the other side of it. The market maker, if the order flow coming in is positive, right? So let's say I'm the end user and I bought a call, meaning I'm getting positive delta. the market maker would be selling the call to me. He would be on the other side, negative delta. So he would need to hedge that delta to be delta neutral, right? So if he said, I want to reduce my directional risk, right? Hedge off my directional risk, he would need to be buying that delta to balance his book. Okay. So when we say positive delta, we're saying that's the incoming order flow, our interpretation. The dealers would need to buy on balance this much delta to get their books delta neutral or balance their directional risk.
Rob is asking from this report, can Dimitri go through how to use the delta to analyze a potential trade? That we only have like 8 minutes. Maybe that's something we can do also this week at another date.
Yeah, I'll go over it. It's not necessarily think of it as you need a trade, but you're getting insights into what's going on. So when you are doing trades, it's part of the information that you're using, in your analysis, in your decision making, right? What are other people doing, how they're setting up, where it's coming from, and so forth. So it's pointing you to information of what's going on in the overall market. All right. So let me get really quickly why I wanted to. Yeah.
We did get a question pop in, another one from 4D. He's asking, does the market maker buy the delta of the stock, of the futures, or what?
Okay, so we don't know what the market maker's actually doing or how they're hedging, or they don't need to hedge, right? So market maker doesn't need to hedge, and we don't know what they have on the other side. What we're doing is saying that the assumption is, if this is the way the order flow is moving, this is the type of pressure that the dealer would see, right? So in an ideal world where everybody starts at zero, right? If every day everybody started at zero, no positions, no deltas, no risk, and you had an end user come in and buy call from a dealer. Let's say they bought a call from the dealer. If the dealer did nothing and sold the call, that dealer has a short delta, right? That means that if you're short a call, let's say not the money, you sold a bunch of calls, well, you're short delta, and if the stock goes up, the call, the call is going to go against you, right? And if it goes down, it goes for you delta wise. So, and he doesn't have to, right? He doesn't have to buy it. There's no obligation. He has his own risk tolerance, or he has something offset in it, but that is the pressure from that trade. So if we start out at zero and that dealer said, this is my only trade and I want to hedge my directional risk for a dollar move in the stock, that's the amount that he would need to hedge. Okay, that's what it is. We don't know what they're doing because nobody tells you their positions. Nobody tells you what they're actually doing, or they could not hedge. They could hedge a like product. They could leave it in there because their positions are bigger and could absorb certain deltas. We don't know what they're doing, but we're trying to see the aggregate delta to see what type of pressure is coming from end users into the marketplace. That's okay. Is that no? As far as what they're doing, we don't know. Hedging, yeah, SPY, you could hedge with futures, you could hedge with the underlying stock, you could hedge with basket of goods that correlate with SPY. That will be all up to each individual trader, how they manage their risk.
Yep, 40 says that's good. Thanks.
Yep. All right. But yeah, thanks for they're really good questions, by the way. We're getting really good questions. Which brings me back. I'm not going to have enough time to answer the email question, but so okay, so one guy emails me, like and it begins this way. I'm a multimillionaire. I've worked at all these big banks, big, top Wall Street firms, yada yada yada, and not sure why he's saying this, except for maybe he's just trying to tell me, okay, I know what I'm doing. I'm just looking for something. Can you help me? So I email him back, okay, well, you say you do the strategy. What's your criteria? What are you looking for? And if I could help you, I'll point you in the right direction. Just to make things quicker, anyway, he doesn't give me any of this criteria. He doesn't really say anything except for, well, just show me how to, basically make money, which makes me think like whatever he was saying was not even true, for various reasons. Because, and this is why, because anytime you're a trader, your real questions are going to be around, how do I become a better trader, right? That's really, if doing it for a long time, your questions are always, how do I do better? How do I become a better trader? How do I analyze something, in this situation, or what can help me, right? That's kind of where you're really supposed to be getting the questions. So then I get this other, email, and this is coming from, I think, like 16 years old, right? Actually, he asked my daughter if he could email me because he knew like MarketChameleon was a website, and he really started, and it's really impressive. It makes me like actually so encouraged. He started out, I use MarketChameleon for implied volatilities, to look up different strategies. I got to put this up. Using screeners, very, very articulate. So right away, I kind of have an understanding, how far along he is and what he's actually looking at. And then he goes on, describes, I'm running this strategy, right? So just think about the difference here. Right away, explain to me where he is, and he's going, I'm looking at this strategy, and he gives me the thesis for the strategy, right? And I'm not going to tell you the entire thing because I do want to answer him. And this is how much I appreciate the question. He gave me the thesis on the strategy. He's looking at strangles. He's looking at leverage products. He explained to me why he's looking at leverage products. He explained to me why he's looking at the strangles and using them to trade leverage products. And then he goes into also explanations why, using the leverage product, you're not going to get an implied volatility crush like you would if you're going long, like you would in a stock because of earnings or an event. And he also comes up with not only a thesis, but then his expectation of, if he's doing this trade, what his long-term expectations are. So I'm giving you an example of a 16-year-old who actually got it, and this other guy who's like, I don't know what he's even talking about. There's no way for me to help. He created a thesis, right? A hypothesis, an expectation. He asked me reasonable questions, and that's kind of like a trade. That's how a trader would think, right? You're an experiment, and you come up with, this is what I'm looking at. This is what I think, why this is a good trade. This is my thesis, and this is my expectation. These are things experimental that you could actually measure, that you could build upon, and that you could strategize. All right. And that's really impressive coming from, somebody who's 16 years old, uses MarketChameleon, he's using MarketChameleon, and it's really obvious to me that he's asking very good questions. And I do want to kind of answer him. I don't have time, but I did promise him, that I was going to help him with some of the questions that he was asking.
All right. Look at
Anyway,
you, D.
I wanted to measure, huh?
Look at you helping younger traders, 13-year-olds. For how old is he?
I believe 16 years old.
Oh, that's
And
incredible.
yeah, and really when my daughter came up and told me, like, hey, I have friends found Market Chameleon actually without, knowing that it was ours. Isabel actually saw them using it and saying, are you on my dad's website? And they're like, that's your dad. So he has to email me with a question. I said, yeah, sure. Not expecting what I was going to get, and I showed you a difference between two questions that I got, one day apart, right? And one, how impressive that question was versus like another one who was just saying things that were just to say things, right? And there's no way to help, because anybody in the service sector, whether you're in real estate, law, whatever, the only way you could help a person is by asking them questions to figure out where their pain points are and what they need help with and so forth. So if they're not willing to answer questions, there's no way you could help a person, right? But it was very I just wanted to mention it because it was, something that just looking at that one email come in right after the other, it was like something that was revealing to me.
Yeah, super interested, D.
Yeah.
Awesome job. I
Right.
sent you an email, D. We did have more questions about the earnings straddle and kind of doing screens, so maybe we can get to that for Edward tomorrow. Everyone, great job, D. Thank you so much. Have a great day.
All right, everyone, stay safe out there. Have a great trip.